Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now, let's look at Ultimate Oscillator. What is the Ultimate Oscillator? This is a technical indicator that was developed by Larry Williams in 1976 to measure momentum across multiple time frames. By using the weighted average of three different time frames, the indicator has less volatility and fewer trade signals compared to the other indicators that rely on a single time frame. So let's look at the formula for the ultimate oscillator. First, you have to calculate the buying pressure, which is current closing price minus the minimum of the current low or the previous close. Then we have to calculate the true range, which is the maximum of current high or the previous close minus the minimum of the current low or the previous close. Then we have to take the average 7, which is the sum of the buying pressure for the past 7 days divided by the sum of the true range for the past 7 days. Then similarly for the average 14 and for the average 28. So that would be the sum of the buying pressure for the past 14 days or 28 days as required divided by the sum of the true range for the past 14 or 18 days. So the ultimate oscillator will be 100 into 4 multiplied by average 7 plus 2 into the average 14 plus average 28 divided by 7. So what are all the components in the calculation? So the buying pressure is calculated by subtracting the lesser of the low or the prior close from the closing period for closing price for that period. Next is the true calculate by subtracting the lesser of the lowest price or the previous close from the highest of the highest price or the previous close for that period. Then let's look at the averages. For 7 period or 14 period or 28-day periods, you have to calculate the ratio of the buying pressure to the true range. So the ultimate oscillator is created by the weighted average of the three averages to generate the ultimate oscillator. So let's look at the bullish version. The bullish divergence forms, meaning price forms a lower low while the ultimate oscillator makes a higher low. The low of the divergence should be below 30 and the ultimate oscillator breaks above the high of the divergence. So here we have the chart, and in this image you can see this is the indicator part. So this is the higher line and this is the lower line. So when the ultimate oscillator indicator crosses this line, this is the high. So this is a bullish signal, and here is the lower range of the bullish signal. So when it's crossing here, this is a bullish sign, and here will be the bearish sign. Let's look some more. So the bearish divergence forms, meaning price forms a higher high while the ultimate oscillator makes a lower high. The high of the divergence should be above 70 and the ultimate oscillator falls below the low of the divergence. So here again in this chart, this is the higher line and this is the lower line. So this is the higher low. So here once it starts crossing from here, the upper line to the lower line, this is a bearish signal line. So once it crosses here, this is the lowest of the divergence. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free.